Yeah, so this is not what I had in mind when I made my last video. Yeah, maybe the rocket in the thumbnail was a little much. So yes, there were a few things that were below market expectations, such as the guidance of the company, and this really is just coming from the lowering of the volumes of the company, though admittedly, it's quite a large lowering of the volume of the company. Additionally, we have lowered the take rate of the company, which is definitely something that I did not foresee, especially with fair financing loans continuing to increase their share in the overall Klarna space. But the company has said again and again that they are maximizing for transaction margin dollars, which are bettering. So even though we are seeing a lowering of the GMV of the company, we actually still are seeing an increase in guidance for transaction margin dollars. And if we even hit this upper end of guidance, then we're actually increasing guidance for adjusted operating income. But the problem that I see is that the market is spooked from the overall decrease in the volumes of the company. This is not a market where you're able to lower top line guidance and then receive a favorable outcome. Additionally, when you're announcing that both the CFO and the CMO are leaving the company in early 2027, the market is just not going to react well. And one thing that I actually did not like to see was the lowering of the transaction margin dollars from Q1 2026 into Q2 2026. Now, this is kind of something that I predicted in the last video, but what this actually does is it proves that the US is more of a seasonal market, because the truth is we're originating all of these monthly loans during the holidays. We're getting the interest in Q1 2026, and then much of the loans are being paid off before Q2 2026. Now, this is not necessarily a bad thing, but I just don't believe it to be as strong as year-round growth in the fair financing segment. What is very strong to see, though, is the global ex-US increasing by such a large margin. And this is the truth that I see with Klarna. I see a lot of benefits within this earnings report with a few sprinkles of poor results. And unfortunately, in this market, if you're not just hammering home perfect numbers, you're really not going to be seeing the benefit that you would like to see when investing in a stock. Now, this absolutely does not scratch off the long-term value of the company and the long-term prospects of the company, which I do talk about in the other video. It's a longer video that talks about Klarna into the long term and what I believe for the company in the coming years. So if you are looking into this pullback, then I would suggest taking a look at that video. Always, never financial advice. But exactly as I said, there are some very strong things within these earnings that I feel like the market is just kind of glazing over. And the volume did grow in these upper teens, which is a very strong figure for a company that is this large. Revenue is growing outsized to that of volume because of the nature of increasing the monthly loans. And finally, transaction margin dollars are increasing as well because interest incomes and other services are going to grow outsized to that of their costs. And this is why operating costs have only grown 16%, which is why we are actually able to get a net income of $9 million for the quarter. Now, this is not what I predicted for the company. I actually believed we weren't going to beat guidance in a way that would give us positive earnings. I believe maybe we would beat guidance, but we wouldn't edge into this positive territory. Additionally, showing the strength of the company for the long term, we see an increase in the average revenue per active consumer, and it's reached $33.7, which is up 24% year over year. This is an especially strong figure, and it's really driven by these memberships and the Klarna card, as users are really starting to deepen their relationship with the company overall. Now, we've actually doubled the Klarna card users in the last 9 months, and this deepening relationship isn't something that's just going to last for a few quarters, in my opinion. This is something that's going to last, hopefully, for years. This is what I believe for the company, and it's part of why I'm still invested into the company today. Additionally, we really are able to continue widening the base that we're able to market our services towards. With the JP Morgan Payments partnership, we really are integrated with so many merchants across the market, which is why we're seeing 1.2 million merchants, which is a 54% expansion from last year. And when you go to Google search and the Gemini app and Google Pay, especially that Gemini app with that agentic commerce, I believe that there's a lot of strong opportunity within that realm. If you do end up going to check out the other video, you're going to see that I talk a lot about fair financing. These are the monthly loans, as we have discussed, that are contributing to a heightening of the take rate of the company and the intense growth in the US section of the business. And what's so strong about this is we've actually seen an increase in the share that fair financing is making up. If we compare last quarter's share of fair financing, we see that it was 38.2%. And then when we compare that to this quarter's fair financing percentage, percentage, we see that that figure is 40.7%. So about 2% uptick quarter over quarter in the share of fair financing, which I do believe to be a very strong lever for the long term, which should increase take rates. And as we said, this really is more of a seasonal business because we're seeing all of these originations for these fair financing loans during the holidays, which is why we see such a large outsized income during this first quarter as those interest incomes start to flow in. But if you take a look, we actually see that the fair financing balance has surpassed that of the holiday season. Yes, pay later is still trailing, but that fair financing segment really is what is driving take rate for the long term. Additionally, the overall US segment is just more lucrative than the ex-US segment, but the fair financing should heighten take rate into the long term. I believe Klarna to be an extremely promising opportunity, and I would like to go deeper into the company itself into the future. So if you are interested in seeing more about Klarna, then make sure to subscribe to the channel, and I'll see you in the next video where we talk about the long-term advantages of Klarna.